What's going on, guys? Today we're going to be going over a strategy that uses volume to its advantage. We're going to dive in and explain why it works, and we're going to show you the strategy. So if that's something you're interested in seeing, let's dive right into the video. So the first part of the strategy is using a volume profile. We're going to dive into the volume profile. We're going to talk about why it's useful and how we're going to utilize what we know about the volume profile for this strategy. So right here is a volume profile. And as you can see, it shows you, a sideways graph like this. And what it indicates to us is the bars show that most of the volume on a horizontal level is in this area here and this area here. So we can actually consciously mark out where the volume is on a horizontal level. So why is this important for our strategy? Well, to understand why it's important for the strategy, we got to dive into what we know about the volume profile and what it can tell us about the markets. The volume profile is telling us that most of the volume on a horizontal level is in these areas. That means a high level of orders, buy orders, sell orders, any type of purchase is coming in at these levels. Now, this is really important to us because it tells us that a lot of action is happening at these levels on a horizontal level. So if I go ahead for a minute and even just take off the volume profile, as we can see, we've marked out these horizontal lines, and this shows us that there's a lot of volume in this and a lot of volume in this. And I'm going to go over that in a minute, but first we're going to show you how to add a volume profile. So you come up here to indicators if you're using TradingView, and you're just going to search up volume profile. There's many different types of volume profiles, but they all pretty much do the same thing. The one I used is the fixed range volume profile, and I just like it because it's what I'm used to. It's clean. Anyways, point is, it shows you where volume is on a horizontal level. That's the most important part. That's what we want. So why is it important that we know where volume is on a horizontal level? Well, it's important because it shows us where the horizontal level is, where people are buying and selling the most. So it shows us that this level is a very controversial level because a lot of people are probably selling here or buying here, or sometimes a lot of people are doing both. A lot of people are placing buys and a lot of people are placing sells in this area. Either way, there's a lot of orders coming in. And as you can see, it shows, if you know anything about wicks, you will know that when price comes into an area and you see a lot of wicks like this here, it means a lot of volume is coming in here as sell volume. A lot of people are either selling their buy positions when it gets to this area, or people are placing sell orders hoping for price to go back down. Same thing can happen from the opposite. So for example, here when price broke through on this red wick here, we had price come back in, and then a lot of people were either selling their positions or buying positions. A lot of people are placing buy orders here, which then moves price up to where it is up here. But point is that there's a lot of action that goes on within these areas. So a couple things to note on that is that, okay, that means two things. That means this is a good area to sell from, and it's also a good area to buy from if price can break through it. Because if price can break through it, then it becomes a major support. A lot of people are going to be taking buys if it can break above and come back down and touch into it. And the same goes for opposite. When it breaks through, a lot of people are going to be using this for an area to take sells. Now, the interesting thing about when we have something like this, a lot of these levels tend to stay the same longer than expected. So right now, these are major volume profile levels at the moment, but as we'll go over, you'll be able to see that it will continue to respect these levels. Now that's where we can take advantage of our knowledge of volume and use it for a strategy. Now we're going to pair this with a couple other indicators. We're going to use a simple moving average. Now the thing about a simple moving average is it just shows us where the momentum is. When it's below the simple moving average, we see a lot of selling momentum, as you can see here. And then when it's above, the momentum starts to change into a more buying behavior. So we're going to use what we know about the simple moving average and what we know about the volume to our advantage to show you a strategy. So let me just remove everything we have, take off the simple moving average. So here is how the strategy works. I'm going to turn on volume profile, and you're going to pick the highest part of volume that you see. This works. So as you can see right here, this one lines up with that. So we are going to go ahead and we are going to place a nice horizontal line here. We're going to delete this one. But as you can see, this is the highest point of volume. So now we can go ahead and turn that off. What we're going to do is we are going to try to pick out a nice area where we see lots of wicks. So we can come here and use the rectangle tool. As you see here, if I can go ahead and mark out this right here, as you can see, this is an area where a lot of price was tapping into it and creating all these wicks, showing that there's a lot of liquidity coming in these areas. So price is going to continue to respect this area longer than anticipated. This is part one of the strategy. We're going to mark out this area. Now that we have this area marked out, this is a key zone for us to pay attention to. We're going to go ahead and move on, turn on the simple moving average. Our settings are length 100. Now for the strategy, all we have to do is wait for price to cross this zone and also make sure that it has the correlation with crossing the simple moving average. So if it crosses above this zone, we want to make sure that price is also above the simple moving average, and then we're going to look for buys. Same goes for the opposite. When we're looking for price to cross our zone, we also want to make sure it's below the simple moving average, and then we can look for sells. Now, the reason why this works is because we have that major zone that price loves to respect. We also have the momentum of either price selling or buying, so it gives us quite the advantage when trading. And these are the kind of edges that you want to look for when trading. Okay, so before we go ahead here and show you the strategy, if you're looking to apply your own strategies or maybe some strategies you've learned and you're looking for a broker, you either want to start demo trading or live trading, or even if you don't want to necessarily trade and you would just like to copy traders, go ahead and sign up with Hanko Trade. Hanko Trade is a broker that offers many different account types to your liking. They have up to 500 leverage. So especially if you have a small account, it is going to be an advantage to sign up with Hanko Trade. But yeah, if you'd like to start trading today, go ahead and sign up with Hanko Trade. My link will be in the description below. Okay, so what we're going to do here is play out what we see here on the charts. We're going to show you what happens when you have both of these confirmations line up. Okay, so now we have price crossing the simple moving average, as we can see here. And now we just need to wait for price to break above the zone. And as you can see, it respects it quite a bit. It's having some resistance off this top portion of the zone, but we want to see price break above that. Nice. And then when we see price break above that, we're looking for what's called a true break, which means we need one candle to break out, and then we need another candle to close above the breakout candle. When we have that, that will be enough confirmation for us to take a buy. Now, that did not happen. And as you can see, this was a fake out. So this is how we avoid fake outs. We want to make sure we see a true breakout. And a lot of people get caught up in fake outs because they're not looking for true breakouts. So hopefully that tip right there will help a lot of you out there. If you're enjoying the video so far, please leave a like. Okay, so we'll continue to wait for another breakout. Okay, here we go. Here is a breakout candle. You can see now we just need price to close above that. We're going to wait for that to happen. And unfortunately it did not happen. And then we had another breakout candle here. Every time it goes back into the zone, we want to reset and wait for the next breakout candle. That was our breakout candle there. And that is a close above our breakout candle. So now this is enough for us to go ahead and take a buy. For this, we're just going to set our stop loss below and go for something nice like a 122, for example. Nothing too big, just enough to take advantage of this momentum that's going to come off of this right now, because we're above the simple moving average, which means price is more influenced, more momentum to go up right now. Plus, we just crossed a major respected zone. So we're going to have quite a bit of momentum flow off of this. People are going to be looking for buys. Okay, so as you can see, runs right up into our take profit. That is one trade down. We can continue to use this zone for a while. Once price has these zones, they're pretty relevant for a good amount of time after. So we'll continue to use this same zone. And maybe we'll wait to see if we can get a sell here. Now we're below the simple moving average. Now we're actually going to start looking for a sell. As you can see here, this giant wick right here showing how much liquidity is in here. After we had this big buy and price came back down, we had a lot of people jumping back in the zone looking to take some profit here by taking buys. So we might even see a little bit of momentum come up off of that maybe. As you can see, now price is moving up. People might be starting to take profit right around this line here. Just like that, as you can see, all these wicks, people are selling their positions, and even furthermore, probably taking sells there as well. But for our strategy, you just want to wait to see for another break. Okay, here is our breakout candle here. We want to see price close below that. We did not get that. We had a nice little breakout candle here, and then we had price close below it there. So we can actually go ahead and take a sell now. Same thing here. We're going to go for a nice 1 to 2. Let's see. Looks like we did not get price to hit our 1 to 2. It was close enough. I mean, realistically, our stop loss was kind of big. Usually it should be something like this. We could have probably got a 1 to 2 way back here, but we'll just go ahead and call that a break even trade. Let's just say we closed it like that. And we can continually do this. So now we'll wait for a buy again, because now we're below. We need to wait for price to break up and above. See, also, if you're patient, you know, we would have hit our 1 to 2, but let's say we closed it at a break even. See if we can get another buy out of this. Now, the thing is, the further it goes on, it starts to be respected a little less. So we are a little farther now. We are about 670 bars away, which is about 40 days if you're on the 1 hour time frame. So we're probably only going to look for one more trade. Let's see if price can even come back up there. Looks like it's still respecting it, as you can see right here with this sell pressure coming in once it hits the zone. As you can see, it's still respected, so it is still pretty valid to look for trades. As you can see here, we had our breakout candle, and then price just closed above that breakout candle. So here we can go ahead and look for a buy. And the only reason we're still doing this is because it's still evident that price still respects this zone. So, but this will probably be the last trade we take. We don't want to get caught up in anything. We are going to go for a 1 to 2. That's a 1 to 3. I'm going to go for a nice 1 to 2 on that. And there you go. So this was just a nice quick video on this strategy, and hopefully you learned something by me actually breaking down how this works. If you liked the video, please give it a thumbs up, and thanks for watching.